Hey, what's up, Yuri?
How's everything, brother? We are
Very
live.
well. How are you doing?
Thank you for coming. I'm doing great. Today's a beautiful weather, so I can't complain. All is well. I love your background. That is
Thank
definitely
you. Yeah, this is the
very,
office.
very shiny, I would say.
Good stuff. Well, thanks for having me. I'm really excited for this private session. I know the session I did at 10 was with the broader public, but if you're in this session, you guys are the VIPs here. Is that correct, Yuri?
Yeah. Well, I want to do an introduction. We're having people jump on. As I understand, you have a PowerPoint that you want to go into.
I do, but I don't need anything on your end because I have it set up right here. So I'll be good.
Okay, great. So I just wanted to pretty much introduce you. Robert, thanks again for joining in. We have people coming in right now. We are going to be talking about some lucrative things that people can get into if they haven't already. Majority of the people who are jumping in are newbies. We do have some seasonal investors, and so whatever knowledge that you can share with us, we just definitely appreciate it. Just kind of wanted to, people are moving in right now, jumping on to the live stream. For those who might not know you, sir, we would love to find out what exactly do you do? Where did you start? How did you become into this? What pushed you? How did the universe provide it and got you into this whole industry and the whole real estate in a way?
Yeah, great question. Well, I actually have that. That's part of our agenda today. The first slide I've got is to meet your host, me, Robert Hytha. So if you want, I can start the presentation. We can get into it.
Yes, sir. Just go ahead and share the screen, or you good with the?
I'm good to go. So if you want to give me a little bit more space, we'll start with today's agenda.
All right. So I'll go ahead and I'll remove myself. Awesome.
Thank you. All right, folks. Thank you so much for coming on today. I'm really excited to share this Earn and Learn presentation. This morning we talked about more of the technical aspects of first versus second liens. But today's episode, this afternoon's session is going to be a little bit more conceptual, and we're going to kind of look within yourself to find your niche and then develop a skill and an expertise to offer this industry to earn while you learn the business. So if you were a part of the first session I did this morning at 10 a.m., I'll probably go a little quicker through like my bio and stuff, but please leave a comment in the chat if you were not available to watch my 10 a.m. this morning, so that I know how many people maybe don't know me and could spend a little bit more time on that slide. So drop a comment in the chat if you were not in the 10 a.m. session that I presented. But let's get into it, and I'll kind of take an eye on that as the comments come in. All right, so let's go to the presentation. Okay, so today's agenda, we're going to start with meet your host. I'm Robert Hytha. We're going to talk a little bit about my background, how I got into this business. And then we are going to go over a bunch of free stuff that I have to offer through my company, Fix Notes. I'm leaving that right at the top of the show so that you guys can get a whole bunch of value out of this, even if you have to peace out and get something else done. So that's the second thing we're going to cover. Thirdly, we are going to talk about this really cool Japanese concept called ikigai, which is about finding your passion and your purpose in life. And really, I think at the end of the day, building a lifestyle that you love, because that's going to be super important to longevity and keeping this business something that's fun and exciting for you in your life. And then we're going to talk about finding your niche in notes and going over some very tangible, specific, different niche activities that you can do as a newbie in this space or as a seasoned investor. And then finally, earn, learn, and build to scale. So we're going to go through somewhat of the whole life cycle of learning the business and then building your business so that you are prepared to scale up when the time comes. So please leave some comments, guys. It sounds like maybe everybody who's in the show has already seen the morning session, but if not, leave a comment with any questions or anything along the way. But we'll go through this first slide, meeting me pretty quickly, since you guys probably already know me. So my name's Robert MAXWELL Hytha. I'm a real estate entrepreneur, and I'm an investor. I have a personal portfolio, which includes a coin-operated laundromat, which is part of a quadplex. So I have 3 apartments and this commercial space in one of my investments. We've held that property now for about 3 years. I also invest in single-family residential properties. I self-manage all of my personal portfolio, and I actually really leverage debt wherever I can, because fixed rate, historically low interest rates that are available today are perfect for building a cash flowing portfolio. So I use as much debt as reasonably and safely possible to build a cash flowing portfolio. I also have a self-directed IRA where I invest in reperforming loans, cash flowing notes, and then I have strategic non-performing loan investments, which are more geared towards acquiring more rental properties in local markets. I do not have a large portfolio of non-performing loans because I keep my portfolio management of non-performing loans to my clients' portfolios. And there's a bit of a conflict of interest. And with purchasing loans out of my client's portfolio for my own portfolio, it represents an issue of adverse selection. So I tend not, well, I make it a policy really not to buy loans from my main selling clients who have loans available for sale, so that my buyers have the first pick. Everybody who's looking at the lists of assets for sale, I have not scrubbed and pulled them out for myself. There's everything that's available. All right, I also have a turnkey rental portfolio called Legado. This is an entity I own with one other partner, and Legado means legacy in Spanish. So this is kind of like a long-term portfolio that is actually completely passive. We own properties in a market pretty far west of here, but also still in Pennsylvania, that we use a management company to handle. So it's 7% to pay. Slate House Group is our property manager. They've expanded to a lot of markets in Pennsylvania and offer us a really great product, which keeps things easy. So that's the turnkey portfolio. And then finally, you may know me from US Mortgage Resolution, where I'm the National Director of Sales and Acquisitions. That's a position I still hold with them to this day. Before I started with USMR, they were just at the early stages of building their company. The founders, Tom Dunkel and Joe Downs, had just moved out of their basement offices into a corporate space and had acquired, before I joined, about 46 assets, 1.6 million of unpaid principal balance, along with me. And they were already starting that upward trajectory, but I like to think that I helped them a little bit. We've acquired over 10,000 assets and 400 million plus of unpaid principal balance in the process, analyzing over $1 billion worth of real estate. So that's really what got me started in this industry, is working with US Mortgage Resolution, first as an intern when I was a junior in college, and then all the way up till I became a partner in some of their funds. And then now I have a new company called Fixed Notes, which I created so that I could expand a little bit, build a brand, have other clients as well, and serve USMR from my own entity. So Fixed Notes is my latest, and it's been since 2017, beginning of 2017 when this was founded. This is my focus and where I provide a whole bunch of free content, free value for note investors such as yourself. So want to just go over quickly some of the fun things, the interests that I have. Here's a bunch of little icons. I like sports. I like playing sports. Tennis, football's always good. Any sport really I'm game for. I prefer to play sports rather than watch them. I'm not as much of a spectator. I like to get moving. I also love bird watching. We've actually got a live bird watching cam. Let's see if there's any. Oh, the battery's about to die. So maybe we don't have the birds this morning. But I love nature, love birds. I'm also a musician. You can see the saxophones behind me here. That's a big passion of mine, is learning new instruments and continuing to develop my skills as a musician. I also love nature, love climbing trees, love gardening. Actually, this afternoon, I'm going out back with my wife to plant a bunch of bulbs, and I have to move a hydrangea plant that I planted yesterday. Big bummer that I put it in the wrong place, but you live and you learn. Also, there's a koi fish right here. That's because this property that my wife and I just moved into in the beginning of this year, we inherited a koi pond, and we didn't think we'd love it so much, but it's really awesome. And the fish are a great way to, lower your blood pressure and de-stress after a busy day working out mortgage notes. I have a little skateboard icon because I love to skateboard, love really anything, extreme sports, biking or blading or snowboarding. My latest obsession, and I'll get to this with YouTube, love learning things on YouTube. And the thing I've been most obsessed with on YouTube lately is foil surfing. Basically a surfboard attached to a hydrofoil, and it's a really, really cool way to get on the water. So that's been my latest obsession. I don't own a hydrofoil yet, but I've been learning all about it. And then of course, I have my own show on YouTube. I post, oh yeah, the bird can play sax. That's fun. So on the Fixed Notes YouTube channel, I have this show called Be the Bank, where every single Wednesday at 1 p.m. Eastern time, I present an industry topic, go through some case studies, a whole bunch of awesome free information for you if you're interested. Next episode, that skipped over quick, but next episode is this Wednesday, episode 18. We've got all sorts of content, assets for sale and case studies, giveaways. That's Be the Bank every single Wednesday. There's two other things that we offer through Fixed Notes that are totally free to you. One is fixednotes.com/news. This is an RSS aggregator that I built to consolidate industry news sources from all over the internet to put them into one place. You can review at fixednotes.com/news. So that's a free industry news aggregator that I curate myself using this RSS aggregator. So you can review all of the curated list of this high quality, timely information over on fixednotes.com. Also, of course, we've got fixednotes.com/learn, how to invest in mortgage notes, 100% free. It's a course organized into a bunch of different modules that will get you really into this business from scratch to being a knowledgeable industry participant. So definitely check that out if you're just getting started, or if you want to brush up on some things or review, state-by-state foreclosure laws or resolution strategies. There's so much information there. Here's kind of the high-level picture between getting started, reviewing the market, due diligence, closing your deals, asset management, and some bonuses as well. That's all free, so definitely check it out. And I talked about all of this already in my 10 a.m. call, but I do have at the end of this session one new thing that I did not share on the call in the beginning of the day that I think you guys are going to be excited about. So stay to the end for that. But we want to get into finding a niche and earning and learning in the business. And the best place to start, I think, is this concept of ikigai, reason for being. Ikigai is this really cool Japanese term that combines your passion, your mission, your profession, and your vocation into one purpose for your life that is exciting, is profitable, and it makes a difference in the world. So I really like thinking of these Venn diagrams, this quadruple Venn diagram, I guess it would be a double Venn diagram combined, to kind of define in your own mind, what would that ikigai look like for you? Where you can combine something that makes you money, that you're good at, and that you love, which also provides benefits to the world. So one word of warning here that I'm going to share with all of you is if you are focused in just this bottom section, what you can be paid for, you're getting into this business for the wrong reasons. And at the end of the day, this is about helping borrowers resolve troubled situations and get out from under their non-performing defaulted mortgage loans. So by only focusing on what you can get paid for, you miss this bigger purpose of what the world needs. The fact that there's large portfolios of distressed debt that need to find resolutions. At the end of the day, that's what we're looking to do, to help the borrowers. And we talked about this a lot in the first call, but we asked 3 questions when we talked to a borrower. What happened? Where are you now? And what do you want to do? And when we have those answers, we're able to craft a resolution that benefits the borrower, makes the world a better place. So look inward, think about what would fit these boxes for you, and we'll start to get a little bit more tangible. So first, let's start up with assessing your abilities when you're finding your niche, because whatever you have, whatever skills, abilities, and expertise that you're bringing into this business, that's your first competitive advantage. That's what you have that nobody else has. So start by thinking of your background and what you've already experienced with. If it's real estate, you've got a leg up already, because that definitely gives you a lot of different directions to go right off the bat. If you're into sales, I think having the ability to sell and to communicate ideas and convince people, persuade people, I think that's super important in a bunch of different areas of this business. Customer service, engineering, computer science, like it goes on and on. What are your background? What are the abilities that you're bringing in? And that also kind of relates to your skill sets. Do you know how to use Microsoft Excel? Can you make presentations and pitch books to raise capital? Do you have like maybe some hands-on construction type of experience with like rehabs? Or maybe you're very organized and you've built other businesses in the past. Focus on those skill sets and how you can use that. You can leverage those skills to build a career in notes. What are your interests? For me, I like graphic design. I like public speaking. That's why I like to put together these presentations and talk every single Wednesday on YouTube. But there's so many other interests. Do you like reviewing bankruptcy law? Do you appreciate the nuances of litigation and foreclosures? Do you want to learn about different markets and geographies around the country? Like, where do you find your interest? What can you do that would not only be, profitable and fit your skill set, but also something that you really want to pursue because you find it interesting and it's not just about the money. So once you've looked inward at your own abilities, you can start to gain experience and find some specialties. So right off the bat, I mean, you could find a company that needs an intern. That's how I started, as an intern with US Mortgage Resolution. And that's really one of the main ways to earn and learn, is when you're in a position to provide value to a company and build your, for me, it was making myself indispensable, putting different responsibilities on your plate and then knocking them out of the park so that you get more responsibilities and eventually become a critical member of the team. And you can do that starting as an intern and becoming a partner someday. Whereas mentorships are kind of like the pay to play model, where you're going to pay a mentor or a consultant to get you into the business at a more rapid pace. But what's interesting about this call and what I'm excited about is the fact that you can get into this business with none of your own capital using some of these strategies we're going to talk about. So once you've honed in and you've specialized, you've become the best at one small area of the business, you're able to start branching out from there. You want to establish your brand. So I think that establishing your brand can be started real early and can kind of grow organically over time. And it starts by over-delivering for your clients. And when you get a great testimonial, every time I get an email that says, something nice about myself, I mark it as a testimonial, and I make sure to save that for the future so that either I can reach out to those specific clients and say, would you write me a LinkedIn review? Or could I use the text of your email on my website as a testimonial? So grab those as they come in. And the only way to get those testimonials is to over deliver and make things add a lot of value for your clients. Share your knowledge and experience online. Even if you're a total beginner, you want to be someone who is out there either through social media or, YouTube, I guess, really is social media. But you can sort of create a diary or a journal as a new note investor learning the business, and putting yourself out there, even if you don't know what you don't know yet, is going to attract like-minded people who want to learn, who want to engage, and who want to help you. I think of this really great Chris Rock quote where I think he was talking to Oprah or something, and he mentioned how whenever his car would break down, because he had some really rough cars in the early days, whenever his car would break down on the side of the highway, nobody would come and help him. But as soon as he got out of his car and started pushing it, that's when the people who were driving by saw him and saw that he was helping himself, and then they would pull over and help him as well. So make sure you're putting yourself out there and learning even in the early stages so that people can see that, resonate with that, and then at the end of the day, when you've actually built the skill and the experience, they can look back and see that track record, see that history of developing your knowledge. And eventually, you become the go-to guy or gal for your niche in real estate or in the note business specifically, based on all of that groundwork that you laid. And we'll get back to the groundwork and laying the foundation for scaling up and for success very soon here. But for now, let's talk about adding value and focusing on one of three different avatars for this space, three different profiles that you can sort of grow into. And I define that as being a deal maker, being an operator, or being a networker. And there's some nuance there, and maybe some others that I'm skipping. But let's say, just to start, as a deal maker, you're unlocking new seller opportunities. You're connecting the dots to optimize processes. You're finding pricing arbitrage by, connecting your due diligence team with your legal team and, making the whole process work. You're the quarterback as a deal maker who's setting the pace and making sure everybody's moving in the same direction. An operator, a very important member of the deal maker's team, because the operator is the one who's actually getting stuff done and facilitating that process. The data entry, the due diligence, some of the grunt work, that's the operator's role. And you can kind of combine these. And in the beginning, you might be wearing all of these hats at once, but operator is very crucial. You're executing on your system procedures as the operator. And then finally, as a networker, you're building trust with vendors, with partners, with investors. You got to turn up the charm. You got to make an impression and connect like-minded individuals and counterparties that can be greater than the sum of their parts. So put yourself out there, like I said, even as a novice, be sharing your journey in this space, because that's going to connect you with those like-minded, potentially future partners or future investors or future counterparties in some other way. So these are kind of 3 profiles to kind of focus on if you want to build a team and have the right components in that team. All right, so I haven't seen any comments yet, guys. So please, somebody say hi in the comments so I know you guys can even hear me. And we'll move on to the next slide. So this is some note niche ideas, so that we've talked about it conceptually. Let's kind of bring it into more of a tangible terms as to what activities specifically you can offer investors in this space to add value. So these are kind of like services or products that you can develop as an individual that you can then market to note investors to provide a little value add niche to their space, to whatever business they're already operating with. So first is bird dogging, and this is something that investors do in real estate or notes specifically. It's finding and analyzing asset opportunities for vetted buyers. So once you have a network of investors who want loans, you can find those opportunities and start to vet those opportunities, pass them along to your buyers, and be a little bit better, be a little bit more than just like a broker or a deal maker, market maker, because you're adding that value of analyzing and vetting the deals as well. So bird dogging, super easy, something you can get started with right away, as long as you're not going the joker broker route, which is to just blast out lists of product for sale to your entire network and not really vetting the opportunities before you send them out, or even communicating with the sellers of those opportunities to make sure it's allowed to just blast out their list. Because most sellers will not appreciate you just forwarding on a list of assets and then trying to make a spread. You need to add value to make money in this space. There isn't any get rich quick. You need to put in the work. So another piece of the acquisitions process is the secured scrub. I talked about this in the early call this morning, but protitleiusa.com/order is an awesome tool for free on ProTitle's website that allow you to see who's the property owner when you're analyzing in the beginning, analyzing a note to make sure that the property owner matches the borrower name. So that's something that you can do manually as a data entry type of task to help investors do their secured scrub. And that can kind of be combined with bird dogging by finding the deals, making sure they're secured, and then passing them along to investors who might be interested. More acquisition and due diligence is reviewing MLS details and recently sold comps on Zillow or other websites online. You can really do like a desktop appraisal on Zillow using the recently sold comps. So that's something that you can provide as someone who has some interest and knowledge in real estate to benefit note investors who are analyzing the underlying collateral on their investments. Property tax and ownership research. We already mentioned ownership research with protitleiusa.com, but ownership research can also be done directly at the county website. If the county tax assessor has their property tax records online, then you can also tell your investors how many back due property taxes are owed, who's the owner, and where do they live. You can see if a property is owner occupied looking at those county records. The due diligence process just has so many little specific niches where you can plug yourself in, build a skill set, build some expertise, and add that value as a component of another investor's process. Credit report data entry is huge. Oh, well, we skipped one. County public records, assignment of mortgage verification. County public records, if they are available online, are a treasure trove of leads because you can see what investors are recording assignments. They're also for counterparties, if you want to see which attorneys are actively foreclosing on accounts in your market. You can make sure that the assignments are recorded when you're looking, like with the bird dogging idea. If you're finding assets for sale, then checking the county records to make sure the seller is recorded as the assignee. That's an important piece of the vetting for note investors who are purchasing loans. And then we go to credit report data entry. If you have an investor who has a big stack of credit reports, even if they use a product like CoreLogic Credco, which we've reviewed in depth on my YouTube show, that provides all the credit data in a spreadsheet form. Even if you have that, you still need to manually review the PDF credit reports to get the senior lien past due balances, to make sure that the trade lines that are reporting as senior are accurate, and to verify the other information on the credit report, like the employment information, the occupancy status based on the current property addresses, the public record and bankruptcy information, other trade lines for medical debt or auto loans or credit card payments. So much you can gather from a credit report. So if you can build a template in Excel of different data points that you are going to extract from a credit report, you can provide this credit report auditing service for investors who are doing due diligence or just monitoring their portfolio on a monthly basis. If you've got a local market that has potential opportunities, you can be a boots on the ground, driving by, taking photos of homes. There's a lot you can do there just by having that physical presence in a specific market. And then finally, pacer.gov, bankruptcy review. I talked about this pretty in depth in this morning's call, but that was about the Schedule D on the voluntary petition and how you can determine your secured lien status and the equity based on the bankruptcy filings. So very important niche to understand, because if a loan is not in bankruptcy when you buy it, it maybe will go into bankruptcy. So knowing what to do in that situation, super important. And you can earn money by learning this, by helping other investors that are using their own money, and then mitigating some of your risk, but building a skill set in these areas so that when you are ready to buy your own loan, you've got this background knowledge already locked down, and you've learned it through actually doing it, which I think is the most important, the best way to learn. So I still don't have any chats, guys. You're making me really lonely here. So please leave a comment. Let me know what you think so far. Let me know if you've got an idea of your ideal lifestyle and finding that ikigai concept, what you can do to move in that direction so that you don't get burned out. Because really the worst thing that could happen would be you build yourself a job, you think you're building a business, but you're just building a job, and then you end up hating it. And that would be no fun for anyone, and you're not going to be able to really serve your counterparties and have longevity if you don't love what you do. So let's move on to another aspect of the note business where you can create some other services for note investors. And this is in the marketing and the capital raise. So marketing and capital raise is an important part of a note investor wants to scale, because they want to increase their treasure chest, increase their dry powder to close more deals. So they need to raise some money. So a couple ways you can plug in and help with this is with social media engagement, because most investors that are really focused on their business and building the processes and the procedures and executing their plan, maybe don't have time to keep up with the social media side of things. So to be a part of that, either through, like I said, your journal, your note investing journey, or through case studies and deals and presenting other things, repackaging data that your clients have in order to show off, the deals that they're closing. Virtual event attendance, you guys are here, so you already know this, but education and networking is so important in this business. And nowadays it's all virtual, so you can do it from the comfort of your own home and meet a lot of like-minded individuals and industry experts through these events, which then can benefit your career in the long run. So data mining for exit metrics and portfolio stats is something pretty cool, because it not only gives an investor a little bit more perspective into their portfolio's performance, but you can also create some pitch books and some slides and stuff that present these exit metrics and portfolio stats in order to educate clients and potential investors, as well as to share some of what to expect if they were to invest in these companies. And I actually talked about in the most recent episode of my weekly YouTube show on Wednesday, the episode 17, we really dug into pivot tables. And I did some pivot tables live to show you how to slice and dice a portfolio. We were really pursuing that angle from a potential note investor purchasing assets, but you can also use pivot tables to kind of in a bunch of different ways, either through the exit dates and modeling out the timelines to reach a terminal value, to reach a satisfaction or a modification agreement, or through just slicing and dicing the lien status or the different attributes of an asset to see where a specific investor maybe has the most success, or what asset classes they may be overpaying for because they're not seeing as much success. So definitely check out YouTube for that pivot table conversation in our most recent episode. Pitch book presentation slides. I kind of already referred to this with the investor case studies and track record, but you're kind of putting together a picture of the client of this note investor's business that you can then use to raise capital, to show exactly how their business has grown and what it's expected to do going forward. Blog posts, industry commentary, even if you're a novice, I think you can start to kind of explore this industry and share your learning curve as you go, which will help other people join and share their information as well. But it will also build a database of all this information that you've gathered over time. We'll also get to that, building a database very shortly. Private placement memorandum, PPM, private placement memorandum. Those are the offering docs that an investor will use in order to raise capital. So proofreading those documents is going to be helpful to an investor who maybe wants another set of eyes on him, but it will also give you an opportunity to learn about what kind of terms and verbiage is necessary in a private placement memorandum, so that one day, if you decide to raise capital, you've got that already kind of understood. Then finally, investor relations and expectation setting. It kind of goes along with the exit metrics and the pitch book and everything. But if you are a networking type of person, then by sharing the portfolio performance and by being part of the investor relations team of a potential note investing client that you're working with, can not only grow your network, but also build your skills as like forecasting and track record is concerned, building out the picture of the company so that other people understand what to expect and how to get invested in it. All right, so one more area in the earning and learning note niche ideas, and that's portfolio management. There's way more than just I put on this slide to plug in portfolio management, but we're going to cover these items just at the high level. So first is collateral image review, preparing exception reports for investors who have a large volume of collateral documents to go through is a super, super valuable task that a lot of investors really could use. I'm actually going to be speaking at another conference next weekend. Forget what the name of it is, but it's also in the show notes from the YouTube show. So if you go over to YouTube, you can get the links for that. But this next conference, I'm presenting from the perspective of paper collateral management. So I'm going to have a lot more information to share with you on a panel in the presentation next week. But at a high level, exception reports are essentially just a checklist and the necessary documents to fulfill those check boxes. And those checks are note, mortgage, assignment, and allonge. And as long as you're verifying that the note is an original or a lost note affidavit that's enforceable, that the mortgage is available and recorded, it doesn't have to be original because it's a recorded public record document, and that the assignment and the assignment chain are complete and recorded in the vested entity that owns the asset, and then the allonge chain matches the assignment chain. If you get those check marks all completed, everything works out, looks good, then there is no exception on that specific asset. But if you're missing any of those documents, even if it's just one chain of the allonge, there's one missing piece of the assignment chain or the allonge chain, that's going to be an exception that then needs to be identified and eventually cured. So building an expertise in collateral image review, you can do it from your desk because the investor should have all of their collateral documents scanned and available. And you can use an Excel sheet on one side of your screen and the collateral document folder on the other side. Go through each file, make sure it's available and everything's in order. And if it's missing, make a note. That's the exception report, which can be done in the due diligence process before you buy or as part of an escrow agreement or a bailee letter. So something that needs to be verified before the funds are released, or can be done on an ongoing basis for investors who already hold the loans in their portfolio to make sure that they're all buttoned up and the docs are in order. Next is the property tax audit. And we kind of mentioned this already about going to the property tax record to make sure that the taxes are current, that the owner is still on title, and that their mailing address matches the property address if you're verifying owner occupancy. But also it can be done on a monthly and quarterly basis, especially for first lien investors. First mortgage investors need to be monitoring the taxes. If the lien is not current, if it's not performing, then they're not escrowing property taxes and insurance. So you need to make sure that the borrower is paying them directly, or if not, that you're ready to pay them off to avoid a potential foreclosure from the taxes. Another thing that's a monthly or quarterly auditing process is senior lien statuses. For junior lien investors, you want to be making sure that the senior lien that's the priority on that subject collateral is current and making their payments every month. Or if they're not making their payments, making sure that they're not going through the foreclosure process. So one way you can do that, just another quick tip here, is using the automated call-in details. If you have a credit report for a borrower, then you've got all the information you need, the senior lien account number, the borrower's information, and the senior lien servicer name. If you call the senior lien servicer's automated phone line, you can use the information provided on the credit report to go through the prompts to see very easily and automatedly whether or not that borrower has made their most recent monthly payment. However, if you get a response on that automated line that says, now transferring you to a customer service representative, then you know that the borrower is not making their monthly payments, and the reason they're going to be transferred to customer service is for some loss mitigation. So in that case, you would need a borrower authorization to further that conversation, which you can only do by contacting the borrower, but that's getting into the weeds a little bit. So let's move on to the next one. Bankruptcy monitoring. This is something that actually I'm, through Fix Notes, working on a bankruptcy monitoring tool so that Pacer identifies and notifies my management platform whether or not any of the assets in our portfolio have filed bankruptcy. So that's something that I'm kind of developing right now. And if that's something you'd be interested in applying to your own portfolio, be happy to share with you. And maybe it would light a fire under my butt to actually launch that product. But notifying when proof of claims are required, the POC, super important to make sure that during the bankruptcy, all of the investors' liens are enforceable and they've been evidenced by the court through the proof of claim. Next is performing loan verifications. Confirming consistent seasoning is very important when you have a cash flowing portfolio, because if a borrower misses their monthly payment, you need to put them back in that loss mitigation bucket to get them back on track. If you have an ACH agreement, the automated clearinghouse means that the funds are withdrawn from the borrower's account every month, but even that can fail. And actually in our case study from, I think, episode 15 on the YouTube show, we had an example of that where the ACH failed because of one digit in the borrower's account number, and then we needed to scramble to get those corrected so that we wouldn't basically ruin the modification that we had already set in place and have to remod it because the monthly payments didn't line up. Fortunately, we were able to get the ACH agreement corrected and made sure that that loan was still cash flowing as expected. Next is the modification checklist. If before you get that cash flowing asset, if you get a non-performing loan that wants to be modified, then you want to make sure that all the docs are in order. Confirming that they're added as additionally insured on the borrower's property insurance policy. You want the lender's name on the property insurance policy to make sure that in the event of a catastrophic loss, that the lender is protected and their lien would be paid. You can also confirm that the ACH agreement is in order, that the modification agreement has a notary block and that notarization has been completed, that the borrower's wedding signature is on the modification agreement. Modifications are like assignments, something that can be recorded at the county record, but it can't be recorded unless it's wet ink and has that modification, or sorry, has that notary stamp on it. So very good little task for a future cash flowing portfolio to make sure that they check all the boxes of their modifications. Next is a triage assessment. And this is kind of like creating a priority non-performing loan work list. If you have a list of assets, you know, rows and rows and rows deep, and you want to make sure that you're identifying the most critical situations first, you can conduct that triage assessment using tools like updated credit, updated taxes, making sure that there's no potential tax deeds or certificates that are becoming unredeemable soon. Basically, you can use all of these tools that we've already covered to then assess which accounts need to be hit hard and worked out in the most aggressive way. And I say aggressive, but I really mean being on top of the follow-up, making sure that the borrower responds to each step of the way and the milestones are being hit, or if not, going through that demand letter and foreclosure process if necessary. And then finally, local pre-REO marketing. So Craigslist is a great option for this, and I don't think I've actually closed a deal from Craigslist, but definitely got a bunch of leads when we've got an asset that the borrower has already expressed they do not want the property anymore. And we want to go through the foreclosure process, but before we can justify the expense of the foreclosure, because maybe it's a lower value property, we reach out to the market through something like Craigslist to identify a pre-REO opportunity. It's a non-performing loan, the borrower doesn't want the home, Do you want to buy the loan and foreclose or get a deed in lieu of foreclosure yourself? Or would you want to get under contract so that when we take the deed, we have an exit already lined up? And that's an interesting way to, at the end of the life cycle of a loan, when you kind of have a direction that you want to go, filling in the next step of the way. So when you get to that stepping stone, it's waiting for you to flip the contract, flip the REO to a local investor. So local marketing is super important because it connects the note investor who's at this nationwide level working at their computer with the boots on the ground and the people who are actually in that specific neighborhood. All right, so that's it for the earn and learn note niche ideas. But now I want to talk about building your business to scale and laying a foundation now so that you're able to, whether you want to scale or not, so when you get to the point, you're able to make your business much more efficient, much more automated, save yourself time, and at the end of the day, create that lifestyle, which is where we started the call, and finding really where you want your business to go. So some ideas for laying the foundation. The first is really processes, procedures, and systems. I mean, that is so crucial and kind of easy to forget because when you're first starting and you've got a bunch of exciting deals and there's a lot of activity and you're able to move from one deal to the next and you get this process completed, but kind of in an ad hoc, sort of loose, fluid way where you're not actually documenting what you're doing, but maybe it's working, but you're not setting it up in a way that can be repeatable and trainable and something that you can eventually apply automation into. I would highly recommend taking the long way when you're first doing any aspect of this, building a product or a service for other note investors or acquiring your own portfolio, to make sure that you are documenting the procedures that you are following to get to that point. Because then you can refine those processes and procedures as you go and as you learn more. And then eventually you can either automate or hire people to fulfill those procedures for you going forward. So a couple different items that you definitely want to focus on. Email templates. Email templates are huge because they can be used for buyers, for sellers, for servicers, for attorneys, for realtors, for borrowers. I mean, you can basically create an automated process. It'll start out as like a copy and a paste, but eventually you can plug those emails into autoresponders so that when certain attributes of the deal are completed or checked off, those emails go out to properly push the next step of the process. Finding and vetting loan sellers. You can do this through systems because increased deal flow is really only possible with consistency. And I see a lot of investors, especially in like the wholesaling business, where you're really live and die by your lead gen. You want to find opportunities with motivated sellers and then connect those motivated sellers with your buying network. And some investors will put out a bunch of letters and then they'll do all of the follow-up on those letters. They'll get some deals done. And then by the time they're ready to send the next batch of letters, the first batch has already dried up. So to create consistent processes around that in the note business, it allows you to be front and center with note sellers on a regular basis. Even when you're not ready to buy right now, you're still identifying the sellers and letting them know, hey, next quarter, I'm ready to close. And then when the next quarter comes, you tell them, hey, I'm ready, I'm here, I'm on top of it. So by creating those consistencies, you're able to show that you are a professional and that you're going, to have this consistent process to close deals and to work with different clients. So after you've found those buyers or those sellers, the due diligence analysis and pricing workflow, super important. And I said this a million times, all of this is super important to create systems around, because your model, your pricing model that you use to analyze and price out non-performing loans can be refined with every due diligence process, but it can't be refined unless it was documented in the first place. So even if it's very simplistic in the beginning, put it on paper, put it into Excel, build a model that you can plug other assets into going forward, because that's going to be, really anything that is not measured and tracked is not improved. So measure, document, track it, and then you can improve. So let's move on to the next one here. The escalation contingencies, or wait, we skipped one. Loan onboarding and initial an initial collection campaign. So there is a very consistent process for onboarding loans. And you're going to find your own process as you work with different counterparties. Different servicers have different preferences as to how data is communicated or how new assets are boarded. So you're going to work with your servicers and your different vendors to build these processes. And your initial collections campaign can also be built with templates. You can use templates for after your servicer sends the RESPA hello letter, you could send a welcome package or an options letter, or what some people call the shock and awe package that introduces yourself as the new lender and provides some initial information to help set that borrower on the right track to working out the deal. And if you use a consistent collection campaign, then you can refine it. Because if you eliminate the variables to success, then the variables that you decide to tweak are going to be very identifiable which ones have positive results. Escalation contingencies. This is something that I think a lot of investors maybe early on don't apply consistently. And that is to make sure that if the borrower, and I'm just gonna kind of throw out a potential rule of thumb for this escalation contingency, but let's say you send your RESPA letter day 1 and you don't hear from the borrower by day 30, and you send like a follow-up on day 31, and then by day 60, if you still haven't heard from the borrower, then you escalate. And if the same thing happened, but the borrower reached out and then went dark, you still wait that 60 days and escalate to a demand letter. Doing that consistently is just one more variable that you're gonna avoid kind of muddying the waters and not really seeing why you're having success when you are having success. So make sure that when you have escalation contingencies in your collection campaign, that they're applied consistently. And you can create some buckets. I mean, a low equity loan where you're gonna be unlikely to pursue the full foreclosure. You can maybe extend the process a little bit. If it's a full equity account, you can maybe shorten the process. So there's a lot of tweaks you can make there, but just make sure you're documenting it and doing it consistently. Ongoing portfolio monitoring. Those are little tasks that you can document and then assign to future employees, or you can automate. If you have it documented, then you have a method in which to either plug someone else in or use technology to automate. So make sure that that ongoing process, you've got calendar that bings and tells you, hey, you got to do your portfolio monitoring. You have to check the taxes, the senior lien statuses, make sure the ACHs are in. On a monthly basis, you get those notifications and you're consistent. Exit strategy execution. So when we go through any exit, there's documentation, modification agreements, payoff agreements, releases, satisfactions to release the lien from the property. All of those documents and those processes can be automated to save you time. Your modification agreement, for example, if you use a tool like I do in Podio, you can create a PDF that pulls data out of your database, plugs them into specific modification template, and then just needs to be double checked and generated instead of typing in manually the borrower's information and the legal description and all the information every single time. You can create an automated method, which it seems like it'd be easier just to automate everything and maybe things, what's the downside? Well, actually, it's more likely that you'll have human error by trying to do it manually than if you just have a system that processes it consistently every single time. Here's a good one, vendor output spreadsheet customization for easy intake. So if you are using, even if you're not using a database, you're just in Excel, you still want to make sure that the information that you're communicating with your vendors is consistent. And for me, I use an upload tool to upload my servicing records, my payment histories, my expense histories. I upload that into my Podio database. And if my vendors provide a consistent spreadsheet every single month, then I can just drag and drop. I don't have to manually go into that spreadsheet and correct things and make sure that it fits my format. Because if you communicate that format right from the beginning, you could even go as far as creating an API in order to connect your vendors, your servicers with your database so that you don't even have to do anything every month. It's just automatically pushing data when necessary. And I mentioned that in the last one, APIs, web hooks, and automated workflow. So a really great way to get started to understand this is through Zapier. Zapier is kind of like a no coding necessary way to use webhooks. And it creates a really amazing tool for automated workflows because Zapier is kind of preset with a bunch of different services all over the internet, like Right Signature or Dropbox or Google Sheets or Podio for my purposes. And you can use all of these various web services and connect them through Zapier to really save you a whole bunch of time in the long run and avoid human error. So even if you're not super technical, I would advise, if you know how to use a computer, to look on Zapier for the services that maybe you're already using, and then think about connecting those services to make your life easier. All right, so that's it for building your business for scale. I think I have a couple of tips in the next slide, but I want to open it up for any questions. Please feel free to leave a chat. Don't be shy. I would be very happy to discuss something with you. Even if you could just say, hey, we hear you loud and clear. That would be great. Send it in the chat. All right, so consistent deal flow. We mentioned this before, but if you're not being consistent with this process, you're not going to have the opportunities available when they become available. If you only send out marketing when you're ready to buy, then you're gonna miss the opportunity when you don't line up with the seller who's ready to sell. But if you're on top of things and you're keeping them notified, you can create this consistent deal flow. So I got this kind of flowchart idea from Martin Cyans on Facebook a couple weeks ago. He presented something similar. And I thought it was a good idea to kind of talk about these various activities and how they connect. So to start is your reputation. And it's at the top because it's the most important. You can't have consistent deal flow if you have a bad reputation. And that reputation allows you to do marketing. You can create content, you can attend events like this. But if your name and your reputation is good, then that marketing is going to be well received. It's going to develop seller relationships. And seller relationships are how you get more deal flow. And the only way to have successful transactions is to have deal flow. So once you've completed a successful deal, that feeds into the reputation. Every counterparty that you work with is then getting a good experience. They're getting value out of this interaction, which is going to increase your reputation. Hey, Mustaquim, thank you so much for leaving the comment. You hear the great info. I appreciate it. Thank you, man. I apologize that I'm not like asking. I want to answer questions in the chat, but you know, that's good too. So leave a question if you have any. So we're going to look at another chart very similar to this, but this one is for capital raising cycle. So this is kind of, there's two circles here that are spinning around. One is your deal flow and one is your capital raise. And they're kind of like gears. And when they fit together, your capital raising supplements your deal flow, which then creates more scale and a greater organization. So just like reputation was at the top of that first cycle, this one is track record, which is very similar to reputation. It's just a little bit more quantifiable. So your track record is what allows you to do great marketing. Because if you can share your successes, you can share those case studies and the things that are working for you, then that's going to develop the investor relationships, the people who see that you are successful and they want to finance that success and have some of it for themselves. Those are the investors who are going to participate in a capital raise through a private placement memorandum, or maybe a personal partnership, depending on which direction and which vehicle you choose. That's going to, in turn, benefit for successful transactions. When you raise capital and then you successfully deploy that capital to create a rate of return for your investors, that benefits your track record, which perpetuates the cycle, allows you to buy more, allows you to raise more, and allows you to keep growing. So if you have any questions on these, please leave a comment. But we want to talk about setting up for success now, and how in the very beginning, when you're still earning and learning, what you can do to make sure that you're ready for that next phase. Whether or not you want to scale up and raise capital and do all of that stuff. Personally, I don't really want to do that. I like to keep my life a little simple. I don't like having investors. I think that creates a little more stress than I would like. But I would still follow all of this advice, because this is what's going to make your life easier and more efficient in the future. So document all your processes and procedures early and often. Refine those procedures, keep them organized, keep them maybe in a Dropbox or a Google Sheet where all of your team can review and optimize and review those processes and procedures, refine them to make them better. That's the next one. Refine your processes and procedures for accuracy, clarity, and efficiency. One thing that I do before I delegate any tasks to my assistant is I do the task at least once following my own process. And if I need to make any refinements or adjustments, I do that on the fly while I'm actually doing the process. Because if you just delegate something without actually going through it yourself, there's a lot of times that something slips through the cracks, and then either that you have to do it yourself, you have to like spot check it all and it might be incorrect, or your employee has to do it all over again because you didn't explain it properly the first time. Here's a big one: automate before hiring. I say tech first and then the human capital for a couple reasons. One, it doesn't put your human capital at risk if you move from humans to automation. I wouldn't want to lay people off. I want to have a team that I grow with, and actually I want to have more employees, not get less. But the reason I can have more employees is because the people who I would hire are designed, those roles are designed for things that are not automatable. Anything that is automatable, anything that you can create an efficiency through automation should be created first. And then you plug in the people to connect the dots after the fact. Don't take shortcuts. You'll thank yourself later if you document things. I know when I first started, like I said earlier, I was really excited about getting all these deals done, and you can kind of get ahead of yourself. And then you've got all of this like cleanup work to do to make sure your database is accurate, to make sure all of your expenses and income is logged properly. Because you can keep running full steam ahead, but if you're not tidying things up behind you, then you're going to end up in a position where you get way out of control, your spreadsheet's a mess, everything's unorganized, and then it becomes way more of an issue than if you just implemented those organization principles in the beginning of the process when you only had a handful of assets to review. Don't take shortcuts. And then finally, stay organized, keep your data consistent and consolidated. If you use Excel, and I think that Excel is a great place to house your master inventory, all of the deals you're working on. You can even plug in your prospective purchases, the loans you're reviewing for due diligence. You can put them in the same spreadsheet with a different category, perhaps pre-acquisition, acquired, and then like liquidated. You could have different categories, but make sure those categories are consistent, because the worst thing that can happen is when you want to run a pivot table to see the breakdown of your second lien portfolio by senior lien status. You want to see how many current senior liens versus how many foreclosure initiated senior liens you're holding. And you run that pivot table, and then all of a sudden there's like 50 different senior lien statuses because someone put in current, someone put in as agreed, someone put in as space agreed, someone put current with an exclamation point next to it. All of those different things that I just mentioned, current and as agreed, they mean the same thing. The loan is being paid in the senior position. But if it's not consolidated, then your pivot table is going to have 3-4 different rows that mean the same thing. So make sure you are consistent with any application of that data entry. You can also use data validation in Excel. If you just Google it, you can learn a little tutorial about how to use data validation. But basically, it makes sure that Excel only accepts certain fields, certain categories into certain fields. For example, you could create a drop-down list for senior lien status that only had current, rolling 30, rolling 60, 30 days past late, 60 days past, 90 days, 120 days plus, foreclosure initiated or foreclosure collateral sold. Then maybe one for unknown. But if you have just those options, then anybody who's doing the data entry, and this can also be done in Google Sheets, they're going to be, it's idiot-proofed. If they see current and they try to type it in and they get a misspelling, it'll say, no, it's supposed to be this. It's supposed to be current, spelled properly. So data validation, super useful tool in Excel or in Google Sheets to stay organized. All right, let's talk about a couple tips, some additional tips. One is to leverage virtual assistants. I have found a huge amount of success with my virtual assistant, who I hired like 3 years ago now. And it has been just amazing working with somebody who's outsourced. So they actually are on the other side of the world. It's the opposite time zone as us. So when I'm going to sleep, I'm giving them tasks. When I wake up, the tasks are done. I originally hired him for less than $3 an hour, and now he makes over $5 plus bonuses plus overtime, and it's well worth it. I pay my assistant about $2,000 a month now. And that's, I mean, well worth it. Absolutely. Build a second brain. Note-taking can be so valuable if it's organized properly. So building a second brain is a concept that you'll see. There's some circles on the internet who really communicate how to do this effectively, but essentially all it is is a repository for a brain dump and an organized repository that can be accessed using searches and tags and categories, so that when you have an idea, you can connect that idea to other ideas and apply it all together. So for me, I use the Notes app on my iPhone because it's also on my Mac, and I can type in an idea on Mac and I get it over here. Some examples of stuff, like I have one note that's just names. And whenever I meet somebody in the neighborhood or at a grocery store or something, if I want to remember their name, I plug it in and make sure that I make a little note about who they are. And then if I'm walking down the street and I see somebody who I should know their name in front of me, I check it real quick. Did this just this past week. And that's my second brain, because I can't retain all those names, but my phone can. And the same thing with strategies or your processes and procedures or an article that you like. As long as you're capturing that and then properly categorizing it so you can grab that information later and connect the dots between other ideas, then it's very valuable and can be very, very helpful. And actually with the Notes app, I share that with my wife so that she can look at the names as well. She uses another one for the grocery list. We use one to manage, like I mentioned at the beginning of the call, we self-manage our rental properties. So we've got some information there. It's super, super helpful. And I really couldn't go without the technology now. And I guess a lot of us are sort of being spoiled by the tech. It makes our lives so much easier. But I think what you can do to graduate, to lever up, to get beyond that, is to use the tech to make yourself even better. Because it's very easy to be pacified by the technology so that you actually become weaker and less capable. But if you develop your skill sets and continue to get better every day, but use the technology to handle the things that the technology does best, then you'll have so much more capacity to really learn and be better in those areas that only humans can. So definitely recommend building a second brain. And then finally, SWOT analysis: strengths, weaknesses, opportunities, and threats. It's good to just assess your specific SWOT, your specific organization's strengths, weaknesses, opportunities, and threats to mitigate downside. If you do not have a good attorney in a certain area, that could represent a risk if you hold a large portfolio in that area. So make sure you fill in your team where it's needed. Or if you are more of a quant, you're the analytics guy who's using the modeling and the Excel sheets, but you don't really like to talk to people, find somebody who's the salesperson, find someone who's the networker. So identify and mitigate those downsides. All right, one more thing I think, and this is the, oh wow, I didn't even put it in. I had a checklist for finding your own virtual assistant, but I did remove it because it gets a little bit complicated without having some download links. I have those download links for you for free in my YouTube show. Please go over to the YouTube channel and subscribe. Once I hit 100 subscribers, we can finally have a custom URL. So it's youtube.com/fixnotes. Right now it's like just Google Fixnotes YouTube or whatever, you'll find it. And those episodes have a link which gives you an entire play-by-play, including the templates that I use to find my virtual assistant. The specific market, the specific wages that I offered him originally, and the entire process I use to vet a bunch of different potential candidates and refine that into just 4 that were the best possible candidates, of which I chose the best one of them all. So definitely check that out on the YouTube channel. And there's a whole bunch of download links for spreadsheets and investment calculators and the current events that are going on. So check that out in any episode of the YouTube channel. So thank you so much for watching, guys. This was brought to you by Fixnotes. We have so much free stuff available for you. And don't forget, I'm going to share something else that I didn't share in the morning call in just a minute. But we've got the live industry show, Be the Bank, every single week on YouTube, Wednesday, 1 p.m. Eastern. We've got the note investing course, 100% free, fixnotes.com/learn. The news aggregator, the RSS feed that pushes in industry content that I curate, also free. And you can check that out on fixnotes.com/news. Here's the new thing. I just launched this. Well, I haven't even launched it yet. I'm launching it now, I guess. The next level is my Mortgage Notes Mastermind. So fixnotes.com/VIP will take you to the membership levels. So if you're already a member of Fixnotes to review the course and all the free stuff, or if you are a note investor who's already signed our non-disclosure and you can look at assets for sale, you can take the next step and become a VIP Mastermind member. $30 a month. I'm definitely going to be increasing the monthly rate. It's locked in for anybody who signs up I'll probably be increasing that definitely before the end of October. So you can definitely get locked in now. It offers you a workspace in Podio, because I believe that you can learn so much in Podio that includes document templates, an inventory spreadsheet, well, inventory app in Podio, so you can see how I organize mortgage note assets in my Podio organization. It also includes all of the case studies that I present on a week-to-week basis on the show, linked to the inventory data, so you can see a lot more content than you would just by watching the show. We also have an event calendar, a discussion forum, and the very best part is we've tracked every single county in the country. There's 30,000 plus counties, and we've included a record for every county in the country. And we've been slowly but surely developing this database to tell which counties have public access to their records, which counties have tax deeds versus tax liens. Then we have a state repository as well that gives you the state foreclosure estimates, the timeline estimates, whether it's a super lien or a judicial versus non-judicial state. A great database full of information. I would highly recommend you check it out. It also awards you 50% consulting rates with me. If you are a part of the mastermind group, then I cut my rate in half for really whatever consulting you need, whether it's building your business, specific note deals, due diligence, wherever I can help and add the most value for you. So I hope you guys enjoyed this show. Thank you so much for watching. I really enjoyed presenting it. And thank you, Nick and team, for having me at the Distressed Mortgage Expo. It's a bit of a bummer that we don't get to see you guys all in person, because that's a big part of networking. It's hard to network when it's just all virtual like this. Something magic happens when people are in a room together. There's some synergies there that you can't really get otherwise. But one day soon, hopefully the mastermind that I just launched is going to be able to have an in-person meeting. Not anytime soon, but join and lock in that lower rate before we jack it up when we actually have the ability to have some in-person events. Thank you so much. Again, please drop any questions in the chat. I think we went over time, maybe 5 minutes or so. So I don't have much time. Well, I have all the time in the world. You guys might not have much time. You need to go to your next event. But in any case, this was a lot of fun. Please subscribe to the YouTube channel. If anything, that's 100% free, along with most of the things I offer are totally free to you. And I'm happy to help. I really want to get you guys started in this business, because I believe this is the next level of real estate investing. You're moving up the food chain. Becoming the bank is just so much more powerful. I invest in rental properties, love rentals. I love the cash flow there and the appreciation. But the note business kind of coincides with the rental property business by allowing you to scale much quicker, have more cash flow with less work, and at the end of the day, much less liability than being a property owner. So that's all I got, since you guys didn't leave any questions, but I hope you enjoyed, and feel free to reach out to me on any channel, Facebook, Instagram, YouTube, or just email me, and I'll try to respond as soon as I can. Thanks again, guys. See you next time, or see you on Wednesday. This Wednesday, 1 p.m. Eastern time on YouTube. All right, I gotta go. Bye, guys.